Welcome to June. As you've seen, there's been a huge number of articles and news stories and everything about the real estate market crashing and the shift is here and all of this stuff. I'm here to bring a little sense and numbers and reality to you today to help you understand what exactly is going on. There has been some changes, but to call it a shift is a little bit ahead of the game, if you ask me. So stay tuned. I'm going to dive into why and why some of the other things that are going on in our economy are something maybe to be a little more cautious of and aware of. But as far as real estate goes, we're going to be all right. What's up, everybody? Jeremy Kane, eXp Realty here, coming to you with the June market update. As always, please smash that subscribe button if you haven't already. Give me a thumbs up if you like what I'm saying, and definitely let's have the conversation so that we can bring a little bit of reality, especially to our micro Denver market, to understand what is really going on in this real estate market and what this means for buyers, sellers, and more importantly, you. And that brings me to my next point. If you are thinking about buying, selling, investing in the next 18 months, don't waste any time. Book a call in my Calendly link below. I'd be happy to have an intro conversation. No pressure. Let's just make a plan. Let's be strategic about it and make sure that we get you in the right home at the right time and help you on your journey to financial freedom through real estate. There has been a slight market shift. Something has changed. Sometime in the month of May in different zip codes, houses that maybe were not perfectly staged and not perfectly redone started going from, one weekend on the market to maybe 10 days or 15 days, maybe catching 2 or 3 weekends in that time frame. And that was definitely a change, okay? It is May. As we've talked, if you watched any of my market updates or any of my videos, we have college graduations followed by Mother's Day, followed by high school graduations, followed by Memorial Day. That coupled with the weather getting nicer makes May a little bit of a funky time anyways. However, coupled with, record high inflation and interest rates that have jumped, the most they've ever jumped in a, 5 month period, that definitely had some moving parts. So we're dealing with some moving parts here. But the changes, and as I dive into these numbers, you'll see that it might have just been the month of May and the distracted period that was that little bit of change. And let's be real here. Having your house on the market for 2 weekends isn't a death sentence, and it's not the end of, this seller's market. So as we dive into the numbers, check this out. Okay, we had 5,445 homes sold in the month of May. Homes, this includes attached, detached, everything. If we wanted to be in our balanced market that everyone is, saying we're shifting to or getting closer to a balanced market, well, of course, we're always moving one way or the other. We're always shifting. But to get into a balanced market, we would need 32,670 homes to outpace that number. So when you kind of step back and think about that, we are far from 32,000 homes on the market. And as we continue and, go through these numbers, remember, these are just, numbers taken from one day or 1 month or whatever that may be. But we absolutely didn't even crest 5,000 homes for sale in the active market, at certain periods. So 32,000 plus homes on the market to get to a balanced market should be your number one light bulb that we are not headed towards a balanced market in the near future. Next, we need to talk about close to list price. Under $1 million, close to the list price was 105.33%. Above $1 million, it was over 107%. That means that it was the list price plus 5 or 7%, depending on your price point. And this is a lagging indicator, so it's a little bit behind because all of the homes that closed in May, or most of them, especially after, 2 weeks into May and whatever, those are from April. Right? So it's usually a 30-day cycle. We're getting that lower. That number is probably more like 20-day cycle now. However, the close to list price that happens in May is based on the market that we had in April in most cases. So that's a little bit of a lagging indicator. I would imagine that that number will tighten and get a little closer to 100% as the June numbers come out in July, and that'll really tell us about the market that we were in the middle of May when people started things were changing and all of that, because the advertised list price stays on the listing until it closes, and that's when we find out what the close to list price was. But the offer is being made in the month of May, for closings in June and vice versa. So that's definitely something to keep an eye on as a lagging indicator. But for the market, the sky falling, we're still seeing 105% and 107% over asking. A close rate is proof that the market and the sky is not completely falling and the buyers aren't just getting whatever they want at this stage. Some good news, the active inventory was up 14% month over month and 76% year over year. That was coupled at the end of a holiday weekend, so that could be a little bit different, but typically we don't list a ton of homes on holiday weekends. So that's something that's good for our market. However, on the average from 2008 to 2022, we saw 10,500 homes active on the market in the month of May, and we only had a third of that this month. So as you see, the inventory is still the thing. And if we talk about supply and demand all through the upswings, we need to talk about it through the leveling off and all of that. So if supply and demand is still your gauge, here we are with only a third of the active homes on the market, not to mention our population continues to grow. So that's something we need to take into account as we move through these numbers. All right. And I was having a conversation with my good friend, Nicole Ruth, and I'm just going to read to you what she wrote. She said, first off, 95% of all finance properties are done with a fixed rate mortgage. The mortgage is locked in based on the value of the dollar at the time of the purchase. As inflation rises, you're locked in at cheaper dollars. Secondly, rents historically keep pace or surpass inflation. While not paying increased rents alone is a great reason to buy, owning rental properties will pay you more as inflation goes up. The increasing rental income is offsetting a fixed mortgage payment. Alternatively, stocks, bonds, and other retirement plans can be devastated by the long-term effects of inflation, as we know. Third, as the home prices rise during times of inflation, it lowers the loan-to-value of any mortgage debt, acting as a natural discount. As a result, the equity on the property increases, but your fixed rate mortgage stays the same. And that, is a great holistic answer. And I just had to read it to you because there's so many great points in there. And the driving home point to me is you can always refinance. Say you buy at a higher interest rate time, or, where inflation's super high and you're like, okay, as, that kind of comes back down and, maybe the interest rates drop and all of that stuff happens, you can refinance and, get a lower interest rate. But at the same time, your home historically has appreciated, pretty crazily over the last, so long. So that's a huge reason home ownership and housing is a huge offset of inflation, because you can always refinance, right? If things change and, you have a better deal over here, you can go to it, but they can't come back to you and be like, hey, inflation's up, the value of the dollar's up, this loan you locked in at a really good time, but, it's a 30-year fix. So, but we're just going to change it on you. So they can't do that by nature of the 30-year fixed loan. And that is a, wonderful security blanket. You never know what your rents are going to go up. You never know what's going to happen. But what you do know is that fixed payment will always be the same. And if times do change and we get interest rates way back down to historical lows, which they still are technically historically low, but say they go down to the 2s, 3s, whatever they were, then you have that opportunity to make that decision and refinance. It will cost you $5,000, but at the end of the day, if it's your opportunity, you only have that opportunity versus, the opposite of things rising. All right, let's bring this home here with the headlines and everybody on social media and realtors alike and everyone taking all this information and telling you that there's a shift happening, the housing market's going to go to crap, all of this stuff. We need to step back and realize, okay, let's look at these numbers, and the biggest part of all of that is most of the headlines and, the general feel is from a macro level. And real estate is a hyper local or hyper micro market, in my opinion. So our Denver market's very different than, somebody reporting in New York or Florida or wherever. And that's kind of the headlines that we take and kind of pass along and share and worry about, where as being hyper local, these are the Denver numbers. This is what's going on in Colorado right now. And so that's something to really, remember when you're sitting there watching the news one night and the real estate market's this or the real estate market's that. It's impossible to buy. It's, whatever. It's going to crash. All this stuff that you see is, reported on from a Colorado news channel. Each zip code is very different, right? Each neighborhood can be different. There's $800,000 houses in my neighborhood. There's $500,000 houses just across the street, and there's $2 million houses across the other street. So that's something that you have to kind of understand and know that each of those markets is a little bit different and it has different factors and different things that people are looking for. And so to say the market in general is shifting and we're all in trouble and blah 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 is a little bit ahead of the game. And I will tell you that things have changed a little bit. However, sellers can't expect to get 20% appreciation each year. It's not good. It makes it more difficult, as you've seen over the last few months, for buyers to get in $100,000 over asking, no appraisals, all this stuff. And that's actually a tumultuous and dangerous market, in my opinion, than just a traditional 5 to 10% appreciation, which we see historically in Denver. And so just understand that when you're, looking at this. And the bottom line is the best time to buy a house has nothing to do with what I've talked about for the last 10 minutes. It's all about when it's time for you. The best time to sell a house is when it's time for you. So the market will do its thing. And obviously there are some caveats to that. We don't want to just, sell at the very worst time. But right now, if it's time to make a move and you want to sell and downsize, there's no harm in downsizing and getting a house. It may be, probably what you paid for your current house. However, you're going to get a lot more when you sell your current house because of the appreciation rate. So it's much more healthy. There is opportunity for buyers through the summer as we see the distracted periods, lots of travel. And, it's crazy how, we had a block party last night and how the kids' sports and, kind of take families out of the area constantly. So everybody's doing that. And so there is opportunity. There's less competition. Sellers are a little more freaked out because they're not getting $100,000, $200,000 over asking. So there is an opportunity for buyers. However, we are strictly in a seller's market, and we will be for quite some time, as we are only, barely scratching the surface of increased inventory. Jeremy Kane here. If you have questions, or maybe, your number one excuse is you're in a lease, Nicole Ruth and I, who I quoted in this video, have started a lease buyout program. We have a credit that will help you terminate your lease early to get you into home ownership, because it's that important for us to help you start your journey to financial freedom through real estate. So if you have any questions on that, please comment or hit the link below and we can reach out. Jeremy Kane, eXp Realty. Have a wonderful day. Talk to you later.